Like with AI, they're building these AI centers. Do you see any of that happening around here, or?
We see that, we hear about that in the burbs and the exurbs, so like further out. It comes with a lot of fighting from residents. I mean, nobody wants any kind of real estate project developed. Nobody really wants any kind of data center developed. So I think in the right municipality that's hungry for growth and increased tax basis and jobs and all that kind of stuff, I think we'll see that happen. You know, it's impacted our lives so much that you need these data centers to help continue that growth and take it to the next level. And you just got to find the right spot to do it, put the right compliance and controls in place.
Welcome to the Real Estate Show with Pat Lopez, where we talk everything real estate. Today, my guest is Antonio DiCianni from Suburban Citigroup. Antonio, welcome to the show.
What's happening, Pat? So excited to be here.
There you go. Okay, so for this show, kind of excited. We're going to be talking some commercial real estate. We don't do that often. And you're in the commercial world, right?
That's right.
Okay, great. So what I want to cover is, how commercial real estate's changed in the past 5 years. You have, work from home. You have a massive amount of apartment buildings. The whole gamut. I think there's a lot changed. Interest rates, the whole 9 yards. So we're going to jump into that. But before we get into that, I always also ask my guests, how did you get started in real estate? What's your story?
Yeah, man. I've always been in this space. I don't know anything other than commercial real estate. I guess good and bad, right?
Right.
I started in engineering. Figured out pretty quickly after school. I just didn't like it. It wasn't for me. But I apply a lot of the stuff that I learned there in the real estate space. But I worked in private equity. I've worked debt and equity financing, joint venture structuring, brokerage, development, the whole 9 yards. So I've touched a lot of different things in commercial real estate and kind of bring that to my everyday world here.
Okay. Now, your brokerage, you do residential and commercial, or is there two sides of it? Or?
Yeah, we're just a commercial brokerage. That's it.
Oh, just straight commercial.
Yeah, we stay in our lane, know what we do really well, and we focus there.
Okay. So let's talk commercial real estate. Okay. So I sort of mentioned that we have, work from home is more popular today than it was 5 years ago. We had, thousands of units as far as this apartment buildings going up. But that, it looks like it came to a screeching halt. We have, vacancies in, Center City, Philadelphia, whatever that is, 30% vacancies, there. So what does the commercial real estate look like? What's going on today?
Yeah, I mean, the landscape, you hit the nail on the head, right? The landscape has changed over the last 5 years. We definitely went through some ups and downs in the cycle, but overall, I think we're at like a stable place right now. There are definitely a lot of apartments. There's a lot of work from home shift. Offices really struggled. Industrial's done well. A lot of that driver has been people want to live where they want to live and want the ability to work from home.
Right.
Which is why we've seen a lot of the apartments come up, particularly in our city. But people want to live in a cool place that connects you to a lot of different areas.
Right.
Yeah.
Okay. So what are projects that, because you also do development as well, right?
Yeah.
Okay. So what are projects that you're looking for, and then what are you seeing that, people are asking you to list? Like, what are people selling? Like, what does that look like?
Yeah. So we're like a suburbs firm. We work in the city and the burbs, but on the development side of our business, investment side of our business, we focus on the burbs because it's really hard to get new projects off the ground there, and there's not a lot of new products, so we tend to have less competition out that way. So our focus is really suburban mixed-use environments. So we love all the great things about the city. You walk out your door, you go to a coffee shop, you've got a place you can live, work, play, and we try to bring that to the suburbs. So we're always looking for ground and redevelopment opportunities out in the suburbs. Call it an hour and a half outside of Philly.
Okay.
So you've got a cool hub that draws you in, but you can stay out in the in a more spacious setting. So we try to create those live, work, play communities out there. And on the brokerage side, we touch all asset classes, so we work pretty much on everything.
Okay, so that's what I was going to ask you. So anything that somebody's selling a commercial property, they'll come to you. So that you don't care. It is what it is, right?
Yeah, we work on all the asset classes: industrial, flex, office, retail, multifamily. We kind of touch them all, and we bring the development side, investment side of what we know to the brokerage world.
Right. Okay. I'm going to get into that. Start asking you some of that stuff before we go off of that. Now, I hear a lot of like warehouse space because I see that going up with the Amazons of the world and all this delivery stuff. So is warehouse a strong aspect of the commercial side?
So went through a little bit of a cycle where everybody was hot on warehouses because it's so hard to find warehouse space, right? And there's so much growth happening in the city that there's a huge need for distribution, manufacturing space. So a lot of big developers built really big boxes and held out for those landmark tenants like the Amazons of the world, right? That kind of slowed a little bit. Developers are left with a lot of space, hundreds of thousands of square feet of vacant space. So they made some shifts, chopped some space up into smaller boxes, and it's been absorbing really well. So I think we're now back at a place where there's an availability need for warehouse space, particularly smaller spaces.
Okay.
Yeah.
Okay. And then the last question I have as far as that, like with AI, they're building these AI centers.
Yeah, data centers.
Yeah, data centers. So they're just giant warehouses, right? But they need to be refrigerated or whatever because they have servers.
Suck up all the resources.
Exactly. So do you see any of that happening around here or?
We see that, we hear about that in the burbs and the exurbs, so like further out. But it comes with a lot of fight from residents. I mean, it's like NIMBYism at the core. Nobody wants any kind of real estate project developed. Nobody really wants any kind of data center developed.
Right.
So, but there's a need for it. So I think in the right municipality that's hungry for growth and increased tax basis and jobs and all that kind of stuff, I think they'll see that happening. But it's the burbs. It's the far out burbs.
Right. Yeah, because I'm thinking, because they're talking about setting up their own power plants and the whole 9 yards, which they would have to. I mean, that would only make sense.
You got to build a mini city, basically.
Right.
Are you thinking about buying, refinancing, or investing in real estate? I've been a loan officer for 30 years, helping my clients find the right loan for the right property. I keep it simple and honest. If you want real numbers and guidance you can trust, give me a call. Now let's get back to the show.
Exactly. And then even which is really tough, like even nuclear, because you have like these mini nuclear little plants that they can do that can outfit a city. I guess they're trying to entice people by saying, hey, we'll build this data center, we'll do these little nuclear little plants, and in turn we'll give you electricity for free or something. Let us do it, whatever. But it's super interesting how that has to happen.
It's very interesting. It's like I live in the burbs myself, and I'm like, I don't want anything built around my house. But at the same time, like I'll go try and get a project approved, right? But it's impacted our lives. The adoption and growth of like AI, even in the real estate space, we say it, but just across the board, like it's impacted our lives so much that you need these data centers to help sort of continue that growth and take it to the next level. And you just got to find the right spot to do it.
Right.
Put the right like compliance and controls in place. But,
And I would think with something like that, you can be like a little bit out of, in Timbuktu, because you don't need to be right in a city or
that's
whatever.
what it should be. Yeah, I agree.
Yeah. Okay. So let's jump into some of the projects that you look for. You're talking about these, mixed use type of projects. So what exactly do you try to put together? What do you actually look for? How do you pencil these projects out?
Yeah.
How do you get funding? Like I have how? So go ahead.
So like the core bread and butter, what I love to do is like create mixed use environments. So I'm really looking for like 50 to 120-ish units that we can develop in suburban downtownish style setting, where you got the retail on the bottom, you got some maybe office space the residents can go work from home out of, right? But not be in their home. And then you got apartments upstairs, and then a cool amenity set. So to achieve that in the burbs, you usually need like 3 to 6 acres plus or minus. So finding that in the burbs can be challenging sometimes, right? But that's really what we're looking for. And then obviously you need the right kind of zoning, you need access, so you got to have the cool amenities around you. But it's really a numbers game. I mean, when you calculate down land basis, how many units can you fit? What can you afford to pay for the ground? How much rent you're going to generate?
Right.
It's just it's a math calculation.
Right.
Yeah.
Okay. And then now, do you find that you have difficulty like with the zoning approvals?
It's the hardest part.
Yes.
I mean, that and finding the site. I mean, finding the site's a little bit easier, but like getting through the approval process is just like a nightmare. It costs you $1 gazillion, and it takes you 3 to 4 years.
Right.
And then you wonder why the apartments cost so much, right?
Right.
Because
that's I really want to get into that, because there was some like potential legislation from the government, Washington D.C., trying to make this stuff easy, but zoning is local. Only the federal government can only do so much when it comes to that. So what is the true cost? Because that's something that you hear all the time. Hey, the reason why housing's so expensive is because getting through all the zoning, the environmentals, all this kind of stuff. So you're saying that's the toughest piece. It could take 3 to 4 years to get something through. So what does that cost? What does that translate, to you?
Yeah, I mean, like every project is different, right? Because you're basically backing into a number based on how much revenue you think you can get of a project, and obviously, like being in Northeast Philly versus the main line, different rents, you can afford to pay a different amount of money. But generally, what I see is sort of a base for discussion. Like you're probably 45,000 a door, a unit that you're spending just on the ground, unapproved, unentitled. Unapproved.
Hold on.
Yeah.
So $45,000 per unit for apartment.
Piece of dirt, yeah.
But is that acquisition of the dirt and all the zoning, or
Another $5,000, tack on another $5,000 a unit, get through all the zoning process.
Okay, so you're saying the zoning part is 5,000 a unit.
Yeah.
So if you're doing, well, you mentioned like 50 units, times 5,000, that's a big number.
Yeah, and probably a lot. Yeah, and probably a lot more the smaller you go.
Right.
It costs you the same amount, right? So I would say like just $50,000 a door. 45 to 50 grand a door.
Doing acquisitions, the whole nine.
Before you even like start put any shovel on the ground. So like as a basis, you start to think about, okay, now I'm going to spend another like 130,000 in construction cost, vertical costs.
Right.
Another maybe like 20,000, 30,000 in horizontal development costs, or your site development. Plus then the township hits you with like, all their fees and road improvement, this and that, and you put a traffic light in. It's like you're spending like $300,000 apartment unit just to build the thing. So that's where the attainability, affordability, rents being so high component comes in.
Okay, so now I've witnessed and slowed down, greatly. But in the Philadelphia area, there's all these massive projects going up.
Yeah.
Now, is that a little bit different than out in the burbs? Because now you're not, you're not putting stop signs or stop lights and building special roads and all that kind of stuff. Is that a little bit easier?
It's different. I've never developed something personally in the city, but I've heard that it's just as difficult sometimes as a process. You got a lot of the civic associations that want to be involved. You also have a different physical construction process. You've got a union involvement here. You've got underpinning because you're sandwiched in between two buildings. Like there's a lot of that component. You're building differently, right? You're going up vertical a lot higher, so your physical structure is different. So it's a different process. Definitely a different process.
Okay, so you just recently didn't you just finish a development in
Doylestown area?
Okay,
Dublin.
right. And now what was that?
So we built 78 apartments, over 15,000 square feet of retail out there.
Okay.
Yeah.
Okay, great. And that's complete, done?
Yeah, complete. We're in lease up right now, trending on like 65% occupancy. So.
Okay, and then where, when you do a project, what is the goal for occupancy? Of course, 100%, but where's like that break even point,
So I underwrite to 95% stabilized. That's kind of that's where we consider ourselves like in a stable position, right? Can't always hit that 100% mark, but the goal is you want to, obviously. When you hit around like 85 benchmark, you start to feel like a little less stress on you, and you start to get closer to that, like, okay, now we're 1.0 covering close at this point on our debt service.
Okay. Yeah. And then now as far as the apartments and this, like, are the apartments all rented and you're just leasing up the stores, or it's just a combination of the two?
Combination of the two. Like they kind of work hand in hand. Nobody wants to move into the stores, so you got people living above you. Because we're not the city, right? So there's not like an abundance of density around you. They kind of drive the two, so it works hand in hand. It kind of lockstep. We've been filling up apartments, filling up commercial units.
Okay, and now is there any other projects that you're working on or you're eyeing up that you're looking to do?
Yeah, we got a project in Falls Township that we're going to be working on. That's an interesting sort of quasi-attainable market rate style project that we're excited about. We've got one up in Upper Bucks County that we're entitling. So constantly looking at stuff.
There you go.
Yeah, you got to have a pipeline.
Right. And then with those, you're saying it takes years to get through all the zoning, all that kind of stuff to get to the point. Like some of these projects, like are they stepped out? Like one is like 1 year away, the other one's like 3 years away?
Yeah, they have to be, or else if you're not working on anything right now, it's like when you finish one of them, you're going to be sitting on your hands. So. And they die, honestly. Sometimes you just can't get through zoning. Sometimes you run into a sewer issue where you can't get the density you need to, right? So like they die, unfortunately.
Right, so they don't go. Okay, financing.
Yeah.
What does that look like? How has financing changed? 5 years ago, it was, cheap, easy money.
Yeah.
Now it's a little bit more difficult, I would imagine. So tell me what that looks like. And then also go into, I think you do some private stuff as well.
Yeah.
Investment opportunities, that kind of thing. So
I mean, financing, you know this for sure, right? Like financing has been so different. It's like challenging for people to get financed on the commercial side of things. It's a numbers calculation, right? We're more focused on underlying real estate, how much rent gets generated, what's your likelihood of covering the debt service coverage. But it's different. I mean, we're pretty steadily sitting in that 6 to 7% ish range. Your values, it's interesting because your values are kind of still there, but your loan to value gets clipped because your interest rates are so high. So like we're pretty consistently seeing us and our clients approach deals like 65 to 70-ish% is the new norm, as opposed to that 75 mark where people used to sit at.
Okay, so you're saying that somebody has to throw their own money in at 30 to 35%.
Yeah.
Okay.
Yeah.
Now, does that also, they want that for it to pencil out as well, or potentially, or not?
Yeah, potentially. I mean, you underwrite to that, right? And then it's all gravy if we improve on rates and we can actually pull some more equity out and refinance and stuff like that.
So on the financing side, how do they look at it? Like your goal is 95%. Well, it's 100, but at least 95%. Where are they looking at it as far as the bank saying, hey, this pencils out? Are they looking at a number like, okay, if you rent out 80%, we feel comfortable? Are they underwriting to a different standard?
Yeah, it's like every lender is different. Every deal is different. I mean, in markets where like the city here, particular pockets where you've seen a ton of units hit and that absorption's taken a really long time, lenders are underwriting higher vacancies. So, that stabilization mark 95, might actually be like 85, right? So it really it all depends. But generally, like I see them tested at like 95. And if the absorption and the market, there's not a whole lot of supply, can sort of support it, they let it go up.
Okay. And then, now, how do they determine that? Like, do you bring that to the table of saying, hey, there's no apartments, everything's 100% rented? Like, do you bring that, or is the lender does the research, or is it a combination of the two?
It's a combination. I mean, like, I'm always trying to present the project in the best light that I see, realistically. So I provide all that data, and we need it anyway, right? As we're evaluating investment opportunities and presenting it to our potential investors, like we always needed to go through that process anyway. So to give it to the lender is no different. But most of the time, lenders, just like the residential world, like they're getting those reports done themselves. You're getting an appraisal done, right? That's the key.
Right. Okay. And then as far as some of these projects, you go to, private funding as far as individuals investing, where they turn around and say, hey, this could be an opportunity. You make a little bit of money. What does that look like? And how did you do that, or why did you do that? Combination.
Yeah. So we kind of made our niche focus here being partnering with people in the real estate space. So pretty much every deal we capitalize or put our debt and equity together from a combination of equity and then a combination of debt from like a traditional bank. The equity comes from part our balance sheet and then part people in the real estate space. So we've got probably 250 real estate agents, title people, mortgage people who've invested in our projects as passive investors. So building basically passive investment wealth and building a portfolio, but taking the passive side. So
okay, so when somebody would do something along those lines, let's say, okay, here's, I don't even know, I'm making stuff up, but here's $10,000, and then you're going to turn around and say, okay, well, we hold the $10,000 for X period of time, you get X amount of interest. I mean, is it?
Yeah, I mean, every deal gets it's structured differently, but what we typically do and what we typically see in the market if you were to make that kind of investment is there's a return that gets paid. So you get interest sort of on your money. And then at the end, when there's like a big refinance or a sale, you get the big windfall of cash. You usually get your capital back and then a return. What we typically see in development deals, like the stuff that we've been working on, you're pretty much getting like a mid to high teens return on your money annually. That's what it works out to, for taking that development risk.
Okay, so that could be, if it goes well, of course, because there's a downside for everything.
Yeah.
So if I turn around and I invested, well, I don't know, $50,000 in theory, if you're saying high teens, let's just say mid-teens, 15. Yeah. So year on year, I could get maybe potentially 15% interest on that money.
Yeah, you're probably doubling your money after 6 years or so, 7 years.
Okay. And then when you're doing that, obviously you have to roll that all into your numbers because of the cash flow and everything to be able to pay that.
Yeah.
Because, hey, I can pay a bank, 6-7%, but I'm paying Pat Lopez 15%.
Yeah.
You know what I mean? Like that's
That's right.
you have to balance everything
You
out.
have to balance out. It's a lot of math, a lot of balance of like where cash flows go, where money sits, how it gets treated, prioritized, a lot of that.
Okay, and then now on some of these projects, like the one up in Doylestown, right? That's an apartment rental. Like, are you going to just sell that whole project once you get to a certain point? Is that the end goal?
Yeah, so that particular project is a 7-year investment thesis. So we're going to hold that for a while because we don't see a lot of supply coming in that market. So we think there's just tremendous growth over the next 5 years at this point. So we're going to hold that for a bit and then either do a major refinance. We're pretty low leverage right now. We're about 55-ish% leverage. So do a major refinance, pull a ton of cash out, hopefully, or just straight up sell it. So It's a little bit longer of a hold, so you get some cash flow and then a big windfall exit.
Okay, and so that project was, personally for your company. Okay, now do you build out for other people as well?
We haven't done that. We haven't done that. I'm really kind of lean and mean, so I don't know that we're sort of set up to do development work for other people. But certainly on the brokerage side, we bring that knowledge, knowing how to develop, knowing how to work the investment space. Like we bring that knowledge to our clients on the brokerage side. So we're certainly there as like helpful consultants to the way.
Okay. Now, is there anything? I know you mentioned there's 2 projects that you're put together.
Yeah.
Is there anything else out there that you're looking at, or is that pretty much it?
That's pretty much our focus. I mean, we got a couple like little flex deals that we've been kind of toying around to see some growth that we talked about earlier, like some growth in the flex space. So,
right.
But yeah, we're kind of like cautiously, carefully sort of picking what we work on next.
Okay, perfect. Okay, so if somebody wanted to get a hold of you, let's say they have a commercial building, they want to know more, or they want to give it to your company to list, how would they get a hold of you? How would they do that?
Yeah, our website's a great spot, suburbancitygroup.com. You can check out sort of all of our opportunities from the investment side, from the brokerage side of business, whether you want to help with listing or selling or just evaluation on your project. You can also connect me directly at Antonio at Suburban City Group.
Okay, perfect. Yeah. Well, thanks for your knowledge. Every time I see you, I'm always like beating your ear. I said, come on my podcast.
Yeah, I appreciate it. I told my wife I was coming on the Pat Lopez show.
There you go.
I was so excited. She's like, who's Pat Lopez?
Exactly. I'm almost famous. Okay. Well, that's the Real Estate Show with Pat Lopez. Be sure to follow the show on Facebook and Instagram. And of course, this will be airing on YouTube, The Real Estate Show with Pat Lopez. Be sure to put comments, tell me some ideas of show topics I should cover. Remember, this show is everything real estate, no limits. Hope you enjoyed the show, and I'll see you next week.